Yeah, a bit surprised here that it's core CPI, which misses expectations here at 0.2%, considering the fact that gasoline prices were down nearly 5% on a month-over-month basis. You would expect that it was headline that would be weak. But the fact that core is actually a bit softer is a profoundly strong signal, at least to us, that inflation is coming down, inflationary pressures are dissipating, and the Fed is going to be cutting this year.
Alexis asked a brilliant question earlier about tariff dynamics. Let's combine that with the export of Chinese deflation. Is that an untold story for 2026 of a dampening price change in America because of the realities Beijing faces?
100%. And it's funny because if you look at the two most tariff-sensitive components of CPI, you look at household appliances and you look at apparel. The year-over-year rates of change in these prices, 0.5%. We're looking for tariff inflation. Really struggling to find it.
I'm looking at this report right now, breaking it down. Food up 0.7% in December. So we're still not getting a break there, right? Americans are still paying more for the basics, and energy increasing 0.3% in December. So again, we're finding that there are these areas of sticky inflation and no reason to believe they're going to come down anytime soon, Troy.
Well, on the energy side of things, what I would add is that that's likely a reflection of electricity prices going higher on the back of higher natural gas prices. Now, it's hard to disentangle how much of this is just a simple commodity effect versus something that is more related to the AI theme. But that is something that we've been worried about for about a year now.
I mean, the reality is there are these little things that people think. You mentioned electricity rates. You know, I go to the internet like everybody else, and I'm sorry, up 8%, up 10%. Elisa just emailed me. We have a whole internal email system, folks, that we took from the U.S. military. And Lisa emails me and says, Tom, what's inflation on DoorDash, Grubhub, and Seamless? And the answer is ginormous. I mean, how far apart are fancy people like you from the public on inflation?
There is for sure a K-shaped economy, and that applies not only to spending, but also in terms of rates of inflation. But this is something that we discussed really in depth in our year ahead outlook, which is that the household net worth of the top 1% is up 18% since the Fed started hiking rates. For the bottom 50%, it's like 8%. So you're really seeing this divergence of fortunes between, we'll say, the middle classes and then those at the very tippy top.